What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Brandon Jenkins. How you doing today, Brandon?
I'm doing well. How about yourself, Dan?
Oh, I can't complain. I've got my favorite audience member right here in the camera doodad here. And why are you here, audience member? Well, it's because this is a Chance Encounter, and I interview commercial real estate investors. Why do I do that? Well, we kind of have to. And what I'm doing is I'm going through the 5 different motivations I found that really distinguish one commercial real estate investor from another. And then I go through the 6 different roles in a commercial real estate deal. And I say, hey, what's your core competency? Which of these are you going to take up in your next deal? If you want your own commercial real estate roll, die, whatever the heck you want to call it, you can go to dandoesdeals.com. You can download it and print it out for free. And I want you to do it. Why? It's so that way you can effectively communicate on the topic of commercial real estate. And speaking of effectively communicating, it's very important that you know how to introduce yourself properly. So Brandon, can you please introduce yourself to the audience?
I can. So I'm Brandon Jenkins. I'm a commercial real estate investor, and I've invested in deals all throughout the Sun Belt. And so it's something that for me is just my passion. I started off as a petroleum engineer, and I worked in the oil and gas business for a long time. And if you know anything about the business, it's up and down. It's like a roller coaster. When the price goes up, they pick up rigs. When it drops, they start laying rigs down, and that impacts everyone in the industry. I was impacted. And so my initial goal was to find a way to offset some of that employment risk, is what I call it, through real estate. And but that quickly turned into something more than just a means to an end. It became a passion of mine. And so now I'm in commercial real estate. And so I really enjoy it. I really like meeting people like yourself, Dan, who are, big into the space. And that's it.
Excellent, excellent. So you've already mentioned some parts of your motivations, but I like to go through the motivations in these interviews just because sometimes we have newbies on here as well, and they know why they're doing it, but they don't know what they're going to do. So I start with that one. So the first motivation is to preserve purchasing power. Okay, if you rely on the cash flow that comes from your assets to make ends meet, well, when inflation rears its ugly head, you're going to have to make more acquisitions. Okay, you're buying more properties just to make sure that inflation doesn't ruin the party, because it will. And that's not my motivation. My main motivation is trading time for wealth. I've got a background in technology, just like Brandon has some tech background in there. We'll get to that in a little bit. But one of the problems of being a high wage earner, high salary earner, is you're paying more of what you get coming in the form of tax than anybody else. So it made me think, okay, so what are better uses of my time? How can I do something else and not be giving away half of it to tax? And the answer was going for equity instead. So that's what I'm up to. That's why I'm in commercial real estate. But more often, people are just looking to fast track their retirement. Okay. And when you say fast track retirement, that also means taking control of your time to some degree. And, maybe it means winding down to only, like a few months per year, or just a week or two per month, or whatever it looks like, or even just eventually moving to some place with a low cost of living. And once you're an accredited investor or something like that. But the next reason, those guys are never going to call it quits. They are ambitious like crazy. They want to buy their entire hometown. They're going to be hustling into their 90s, and they're looking for generational wealth. Maybe they don't even want their great grandchildren to ever hold a day job. If that's what they're up to, that's them. And the last motivation, they're also going to keep on hustling because they found some sector of society, or maybe it's the environment, or maybe it's animals, who knows what it is, but they realize that accumulating wealth is by far the most effective vehicle to have a big impact on society. So that's what some people are up to. So of those five, Brandon, which resonates with you? What combination of them best describe you?
I believe that you and I are aligned in our motivation. So for me, it is so that I do not have to trade my time for wealth. I'm sorry, my time for money. And so I can tell you my goal is, so my wife and I, we have two daughters. And what I think about is how growing up, both my wife and I and our families, we've always had to focus kind of on what must be done, what we need to do. And I want to turn that around just a little bit. And for me, my motivation is to offer options, or to empower our daughters to have options. I want them to be able to pursue their passions fully. And so anything that they want to do in life, anything that interests them, I want them to have the resources and the backing and the acumen to be able to do those things without being overly burdened, overly stressed with the financial picture. And I want them to have the support. And so we're sowing seeds for that now. But then also, as they come of age, I want them to have that understanding of ways to be creative, and to build on things for themselves that will help them financially. So that's my motivation.
Yeah, I love that. I love that. And, they say that money isn't everything, but you've probably had the same similar experience that I did when things started going better. I like to say that I didn't realize how much of a problem money was until it stopped being a problem. Yep. And teaching your kids that you have to have that backdrop, or else you will get in fights. You will fight over money if there's not enough of it. It's just not a good type of life, and it's a real test for just about everybody. But we were talking about commercial real estate, and let's go through the different roles here. I want to make sure that you can effectively communicate on the topic of real estate. So that's why I have this die available. It's totally free. I don't even ask for your email address, which is a really bad idea from a marketing perspective. But yeah, that's at dandoesdeals.com. Scroll down a bit. It says print out your own, and you can show it to your friends and family and stuff like that. But the reason we go through this is because I want to know what role Brandon is in. So let's start by talking about what's a repositioner. A repositioner is an acquisitions person. So they look at a bunch of different properties and look at a bunch of different paperwork. And what are they actually looking for? They're doing the math. Okay, they have a fancy word for that, which is underwriting it. Okay, they're doing the math to find out, is the property actually making the amount of money that the current owner says that it's making? And they're going through all the different ways that they can reposition it. In other words, they can change it so that it makes more money. So what are the tools in the tool belt that a repositioner has? The first one is more efficient operations, cutting the costs here, stopping those Benjamins from going down the toilet here. But of course, there's more than unclogging toilets and collecting rents. There's also bookkeeping. There's also a marketing component, which is the forte that I've been bringing to my different teams. And that's to make sure that your vacancy rate stays low. But operations, it's a great way to increase your NOI, your net operating income. In other words, find that upside. But often that's not enough for a repositioner. So they're going to need a contractor team. They need some guys to go in there and make the place nicer so they can charge more in rent. And if you are a repositioner like me and from the internet, you've got a problem on your hands. You need a local. You need somebody who can be there in an hour or two and just do that accountability piece. Make sure the contractors are actually keeping on schedule and they're not cutting corners, and making sure that the operations aren't cutting corners. Make sure that, the halls aren't filled with trash or whatever else. You got to have that local. And if you were to line those four different sides, the people involved side by side, and show them to a tenant, say, hey, who are those guys? They'd probably say, oh, they're the owners. But it's not that simple. Of course, the banks are involved. The financiers, you got to go and get a loan. You got to say, hey, I want to buy this apartment complex with hundreds of units. It's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars that you can lend me, do you, Mr. Bank, Ms. Bank, whatever? And they're going to say, okay, let's take a look. Okay, the deal, that's repositioner. Okay, yeah, that's all cool. But wait a second, there's something you haven't mentioned yet. And they're going to want to know. It's the sponsor, it's the KP. What's a sponsor or KP? Well, even if the richest man on earth decides that he wants to buy the largest, like a great big apartment complex, if he wants to get a loan, he needs somebody in the fold who already owns a similar asset, okay? Or he just won't be eligible to it. And I'm messing up with my pronouns all here, but just sorry. Anyway, so the sponsor here, they already own a similar asset. They also have to have a certain amount of liquidity handy, and then you also have to have a balance sheet equal to the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So, Brandon, what's your core competency? What are you most likely to contribute to your next deal?
Very eloquently described. I love that. So I am a repositioner. And so for me, my primary focus and my passion really is underwriting, which I really enjoy. I mean, I'm a geek. I'm a nerd. So I'm a spreadsheet junkie. I love looking at the numbers. I love digging into which levers can be pulled to maximize returns, which levers can be pulled to de-risk the deal a little. And that applies not just to acquisitions, that's also when it's under management and even during the exit analysis. And then also, how does the operations impact the exit analysis? So it really never stops. I think that you typically hear underwriting being applied to only the acquisitions, and that's just not the case. It's okay, how can we acquire the property or get into the deal with the exit plan in mind while we own the asset? How does the exit strategy change? And so it's almost like an evergreen process, I guess you can call it. So that's my long-winded way of saying that I'm a repositioner. And so that's it. That's my core competency.
Excellent, excellent. I love that. And you got the background in engineering. That's the nice thing about the spreadsheets in real estate is at least, it's limited to what people can understand, in a transaction. Whereas like in chemistry and whatnot, it doesn't matter if people can understand it. It's still just the way that it reacts and whatnot, right? But as far as my next question I always ask, it has to do with your ideal property. Some people call it a buy box. And just so you in the audience know what commercial real estate investors are looking for when they say, hey, what's your ideal property? They're asking for, I like to say, 3.5 things. The first thing is the geography. So what state's it in, what county's it in. The second part is the unit count. Okay. And when it comes to commercial properties, you're still talking basically the same thing, unit count. It's, if it's mobile home parks, then you're talking the number of pads, for example. But they want to know the geography, they want to know the unit count, and they want to know the class, which is kind of 1.5 because it's two different ways, two different things with the same word. One meaning of class is the condition of the actual building. The other meaning of class is like the vicinity, the proximity to schools, and like crime rate and things like that. So as far as the property where it's easier for you to say yes and it's more difficult for you to say no, what does it look like, Brandon?
So I am a value add investor. And I look to acquire assets where we can potentially reposition it, but just add value. And they call that forced appreciation. So my ideal property is a B, C class property. I like 100 plus units so that I can, the deal can support on-site management. You can have greater economies of scale. So more than 100 units. Geography. So right now I like being in municipalities where it's landlord friendly and business friendly. Right? You always hear that. And so that's important because that directly impacts the business plan. So I like the Sunbelt states specifically. I do like the Texas markets. I understand that the in some Texas markets they're starting to be overpriced, but also like the Southeast, so South and Southeast markets. And then class. So I've already mentioned BC class, but BC class preferably in a B plus or A area. Mm-hmm. Okay. Now, I will say though, we're, as you know, and as your listeners know, we're in a cap rate compressed environment. And so my preference on class there's kind of a dual strategy. On one hand, I would like to have some buffer against the inevitable expansion in cap rates. I know that it's not forecasted to happen this year, and some people are saying maybe not even for the first half or the majority of next year. But the higher you go in class, the greater the protection, I'll say, you have against the potential degradation in value due to cap rate expansion. Although my ideal property remains kind of B, C class, I'm slowly shifting maybe higher up on that B spectrum, just as a potential hedge against cap rate expansion.
All right, beautiful. So that's the ideal property that if somebody brings it to Brandon, like that's a really nice fit. But as far as like, let's say maybe they have a deal, maybe they don't. Okay, the other people in commercial real estate, these other different roles, each of us are more. We're better suited to help some people than others, people of certain roles. Me personally, I'm always on the lookout for more sponsors and KPs, just because as a marketing person, that's the one who basically can support that sort of help that I can provide, and also they'll see the value of how I can move their business ahead. But and without breaking any SEC restrictions, which means you're not allowed to entice investors. Can you please describe the person who you're best suited to help, Brandon?
Sponsors and KPs, and also I forgot your term for it, the deal sourcers.
Right, yeah, that's a repositioner. So yeah, it's other acquisitions people. So wholesalers, and even though there's so since you are not a bird dog, that's okay. Right. For me to mention that there's some really sticky stuff about bird dogging, but so like you're kind of not supposed to do it yourself. But if somebody happens to be one, definitely reach out to Brandon, right?
Yeah, absolutely.
It's so sticky. I know that the biggest thing I've heard as far as why you got to be concerned about getting bird dogs is just because then like you're also responsible for what they say, and if they break the 506B restrictions, then you're kind of in sheep dip, as they say. But that's who should reach out is people who so that the brokers as well, people with off market deals, stuff like that. That's who you want to talk to for sure, huh? Okay, cool.
Absolutely.
And the best way to reach out to you, we do a lot of our interaction through LinkedIn and through the meetups that I've found through LinkedIn. Is LinkedIn the best way for you, or is there a website that's better?
LinkedIn is the best. So Brandon Jenkins, LinkedIn is probably the best way. I do have a website. It's Birch Prosper. So that's www.birch Prosper, which is PROSPER. So I'm the principal of Birch Prosper. So that's a great way to reach out to me. And I'm also on Instagram at Birch, BIRCH_Prosper. So
all right. Yeah. Beautiful. And that's all the stuff about you. There's only one thing left, which is actually for you in the audience, which is, I don't know if you've noticed it, but staring you right in the papers, there's this awful red button. It's like, and I think it's the worst thing out there. And the only way to get rid of that stupid, ugly button is to click on it. And then it turns gray, and then YouTube starts to pay for these videos instead of me, which is maybe it's like a part of why I've got it in for that awful button. So if you could do me a favor and hit that awful button, I think you're doing yourself a favor, really. But all it doesn't cost you anything. All it means is my videos might show up in your list of suggestions, and you don't even have to watch those because you've already done me an enormous favor just by hitting the button. Just like Brandon, you've done me an enormous favor by joining me today. This has been awesome.
Thank you so much. Thanks for having me.
Awesome. Thank you.